Hi everyone, welcome back. In today's video, we're going deep into Vanda Pharmaceuticals Q3 2024 earnings report. I'll walk you through their recent successes, the challenges they're facing, and what these factors mean for investors. We'll dive into the company's latest moves with Fanapt and Ponvory, discuss pipelines, updates, and make some forward-looking projections for Q4 and next year's sales, and also speculate on a fair share price. Let's get started. Vanda's Q3 report highlights their ambitious strategy of growing revenue through strategic product launches and pipeline expansions. And here is what they're doing well. Fanapt, which was previously approved for schizophrenia, is now being marketed for bipolar I disorder. This has been a promising shift, showing strong potential for revenue growth. In Q3, Vanda reported a 90% year-over-year increase in new patient starts for Fanapt. This momentum is supported by a significant expansion of their sales force, which grew from 50 reps earlier in the year to 150 by Q3, with an additional 50 expected by year-end. The Fanapt Speakers Program has increased awareness among psychiatry prescribers, and metrics indicate adoption is growing steadily. Bipolar I disorder is a substantial market in the US, with nearly 1.5 million diagnosed patients. So given if Vanda captures even a modest percentage of this market with Fanapt, it could yield a considerable revenue boost. Now for future expectations, with the launch of Fanapt LAI or long-acting injectable anticipated in early 2025, Vanda could see accelerated adoption as this form can improve adherence for patients who struggle with, daily medications. Vanda's acquisition of Ponvory from Janssen represents an entry into the multiple sclerosis market, estimated at over $20 billion globally. Ponvory is positioned well in the MS market. In a recent patient survey, Ponvory ranked first in preference among multiple sclerosis treatments, largely due to its quick onset and favorable side effect profile. The transition from Janssen to Vanda caused some inventory destocking in Q3, but this has reportedly stabilized in October. This is a positive indicator for sales growth in Q4. With a 30-person specialty sales team focused solely on Ponvory, Vanda is concentrating efforts on multiple sclerosis centers and specialists. This targeted approach could help them solidify their position in the competitive multiple sclerosis market. Now looking into the pipeline expansion, Vanda is exploring Ponvory's application in additional autoimmune conditions like psoriasis and ulcerative colitis. Psoriasis alone affects 7.5 million people in the US, offering another high revenue opportunity. In Q3, Vanda also updated investors on other pipeline initiatives. The potential application for tradipitant, their neurokinin-1 receptor antagonist, are broadening beyond gastroparesis, despite the FDA's rejection for this indication. That means that Vanda plans to appeal this decision, focusing on tradipitant's potential in conditions like GLP-1-induced vomiting and pediatric insomnia. Now, Hetlioz for pediatric insomnia. Now, it's hard to believe, but pediatric insomnia is a large market with limited treatment options. Positive trial results here could set Vanda up for significant future revenue in a relatively untapped space. But it's gonna be probably hard for the FDA to accept such medications for kids. Now, despite the strong points, Vanda faces some key challenges that investors should consider. Number one, the FDA recently denied tradipitant's application for gastroparesis, a major setback given the significant investment Vanda had made. Vanda plans to appeal this decision, arguing that their data demonstrate strong efficacy. However, the FDA rejections are costly, and this may delay revenue contributions from tradipitant. 2. Due to generic competition, Hetlioz, which is Vanda's sleep disorder medication, saw a 28% revenue decline in the first 9 months of 2024. This is largely due to generic competition. So as generics gain market share, Hetlio's revenues will likely continue to decline. 3. Vanda's expenses have risen sharply due to increased spending on sales and marketing for the Fanapt and Ponvory launches. For Q3 alone, expenses were $58.7 million, a significant increase from $44.8 million in a prior year. Although these investments are intended to drive long-term revenue, they've led short-term losses, with Vanda reporting a net loss of $5.3 million on Q3. Investors should keep an eye on whether Vanda can manage these expenses and start to see, returns on these investments by Q4. And 4, which is something that's going to affect all pharma companies. Medicare benefit redesigns under the Inflation Reduction Act, effective in January 2025, could negatively impact Vanda's gross to net revenue for Medicare sales, especially for Fanapt and Hetlioz. This could slightly reduce revenue margins in the future, particularly in government-funded patient segments. As of Q3, Vanda holds $376 million in cash, a solid buffer for their ongoing product launches and pipeline development. This cash position gives Vanda some flexibility in executing its growth strategy, but it will be crucial for them to start showing profitability trends by the end of 2024. Now, let's talk about projected Q4 sales. For Fanapt, given the growth trajectory from Q3, with a 12% increase in quarterly sales for $23.9 million, I expect Fanapt sales to continue increasing in Q4, potentially reaching the $26 million as the additional sales reps and awareness programs continue to drive growth. For Ponvory, Q3 sales were impacted by a one-time inventory transition. Assuming this stabilizes, we might see a rebound in Ponvory sales, potentially up to around $8 to $9 million in Q4. For Hetlioz, as this product faces increasing generic competition, we can expect Hetlioz revenue to continue declining slightly, potentially coming in around $17 million for Q4. So, combining these estimates, I project Q4 revenue to be in the range of $51 to $54 million, marking a modest increase from Q3 $47.7 million. This would bring Vanda close to their year-end target of around $190 to $210 million. So, to estimate a fair share price, let's assess Vanda's valuation using their projected annual revenue of $200 million for 2024. Given the challenges Vanda is facing, including FDA setbacks, declining revenue for Hetlioz, and recent expense increases, a more conservative price to sales of 5 might be warranted. This adjustment reflects the risks associated with Vanda's current financial and operational headwinds. So, with a price to sales ratio of 5, Vanda valuation would be approximately $1 billion market cap. Given 58.2 million shares outstanding, this valuation implies a potential share price of around $17. This is a more cautious estimate compared to the higher valuation that might apply to companies with fewer growth risks. Now, $17 a share might seem like a crazy valuation, but these are the numbers. In summary, Vanda Pharmaceuticals has the potential for growth, especially with a solid cash reserve of $376.2 million and minimal debt, which provides financial flexibility. However, the headwinds of FDA challenges, Hetlioz revenue decline, and the recent negative earnings per share of 9 cents suggest that a conservative approach to valuation is prudent. If Vanda can successfully navigate these obstacles, the fair share price could approach the 17 range based on the adjusted price to sales ratio. Thank you for tuning in to the Biotech Investor channel. Don't forget to like, subscribe, and hit the notification bell for more in-depth stock analysis. See you next time.